LKZ made a comment recently which in part inspired me to look into Kellogg once again. And stockholders in Kellogg have been crying over spilt milk, as the stock has lost more than about a third of its value in the past 3 years. In other news, since the IPO for Beyond Meat about 2 months ago, the alternative meat company has soared. So could this be an opportunity for Kellogg? Many don't know, but Kellogg actually owns the largest fake meat operation, Morningstar Farms. Given the popularity for Beyond Meat, should Kellogg capitalize on the craze by spinning off Morningstar Farms and listing it publicly? Well, let's take a look at Beyond Kellogg. Beyond Meat is all the rage at the moment, while Kellogg has been an absolute dog. However, Morningstar Farms is a very substantial imitation meat operation, and although the data is not released, it has to be generating around 400 million in annual sales. This is about twice as much as Beyond Meat is selling. Kellogg could use a bit of good news. The stock peaked in July of 2016 at about $87 per share, but is now down to about $55 per share. Kellogg does not provide sales for Morningstar Farms. However, it has been reported that Kellogg serves over 90 million pounds of Morningstar branded food to consumers annually. Reportedly, one-third of those sales were faux burgers, while other sales consisted of faux chicken, sausage, or other imitation meat. Morningstar's value is relatively small in comparison to the current market value for Beyond Meat. Estimates are that the Kellogg brand generates about $450 million each year. The price tag for Beyond Meat is near $10 billion, even though annual sales forecasts are only about $210 million. This is less than one half of Morningstar Farms. Could Kellogg sell off Morningstar Farms? Yes. If they did, it could easily IPO at about $4 billion. This would reflect a multiple of about 10 times sales as compared to Beyond Meat, which carries a multiple of about 50 times sales. So the question is, will Kellogg sell off Morningstar? The answer is likely no. But let's go to the charts and see if the renewed interest makes any difference for Kellogg. We're looking at the 20-year monthly chart on Kellogg Company, and the symbol is K. And for disclosure purposes, I do not hold any shares in Kellogg Company at this time. Now, just simply looking at the price chart, the question is any of the shine from Beyond Meat reflecting on Kellogg? Well, the answer is probably no. It doesn't look like it. However, there are a few interesting things here that I like to see on Kellogg. First of all, taking a look at the trend line from 2000 all the way up to the current time frame. That's a fairly decent upward trend. Not any break throughout the entire time. A couple of dips down to the line and as well as currently, but I think things are improving. So we're just bouncing off of here the 200 EMA. Again, this is the 20-year monthly chart. So we're wrestling with that there. I think we're going to come off that here pretty soon. I say that simply because looking at the MACD. The MACD attempted a basing right there, and it failed after moving up through into mid-2018. So I think we're going to have another one or another attempt at a basing here in this area. And this is the lowest it's ever been, at least throughout this 20-year time frame. And it's been a pretty good downtrend there since mid-2016. So I'm thinking this downtrend is nearly over. And a piece to that puzzle is the histogram. That's a decent low at that point, somewhat consistent with 2009, not as low as 2000. But this level here is somewhat consistent with, say, 2000, and is much improved since 2017 and since 2009. That's one thing. Another thing here, taking a look at the price rate of change, a very long basing period here. It is under zero, not too far from -10, so it does need some improvement. However, I think that improvement is already occurring. Looking here at the RSI, we're at a relatively weak 36.67, as you can see there. But again, the basing has occurred in this time frame there, and certainly this shows some improvement over the last, say, couple of years or so. Again, we're above 2009, and we look like we're continuing to improve there. Looking at the stochastics, I think we're going to get a bottoming in the stochastics here in this area. As you can see there, we're at about 20. It's in the oversold territory. So in my opinion, I think that's going to turn and relatively soon. I would say within the next couple of quarters for sure. Looking at the volume, it looks fine. And then the Williams looks like some of the other oscillators spent a long time down here in this overbought territory, but I think that basing pattern is occurring, and I think things will improve here in the future, again, within the next couple of quarters or so. Going back to take a look at the price chart, I like that trend line all the way back to the year 2000. It hasn't been broken, and even though it does look like it's testing it at this point here currently, I think the bottom is going to be set here pretty soon. So, as usual, conduct your fundamental analysis. But from a technical perspective, in my humble opinion, Kellogg is something to consider for your portfolio. And for today, that's ChewDog Charts. Thank you.